The world's largest economy got off to a flying start in 2018, with unemployment falling and prices of assets like stocks, commodities, and real estate extending last year's gains.
The U.S. economy has strengthened further this year, smoothing through the volatility caused by the recent hurricanes.
2017 was a good year for many other countries too. The World Bank says more than half of the world's economies saw growth last year. That's helped the global economy grow by 3% over the past 12 months. But the World Bank warns this may be as good as things get. It warns advanced economies like the US and the EU are already near full capacity, with little room to grow further, and that growth is slowing in emerging economies like China that have driven economic expansion in recent years. Central banks have pumped billions of dollars into their economies, but this money has largely driven up asset prices while wages stagnate, and getting rid of all the extra cash floating around may put many economies at odds with each other.
Germany needs interest rate rises. Italy would probably not welcome an interest rate rise yet, and some of those weaker economies certainly doesn't want to actually see it overall. That's the problem when you've actually got one single currency with a huge array of economies with different tax policies.
Analysts expect the momentum to carry through this year, with global growth expected to clock in at 3.1% in 2018, but they are not as optimistic for the longer term. Philip Owaira, TRT World.
So let's go to our guest now. Joining us from Paris is our editor-at-large, Craig Copetas. But first, let's turn to Max Wolff. He's chief economist at the Phoenix Group, and he joins us from New York. Welcome to you both. Max, I want to start with you. Do you agree with the World Bank's assessment of the global economy?
Yeah, so look, I think we're seeing a bit of a sweet spot here. We still have massive monetary accommodation, particularly in the developed world. We have very low rates that have been very low a long time. We've built some recovery momentum in the last 8 years since the bottom. The only place I think I would disagree is I think the U.S. won't be able to have a great year in 2018. I think we'll be lucky to have a really good first half, and I think we're kind of running on borrowed time, and we're doing a massive stimulus now in the U.S., having shown absolutely no macro rationale for it whatsoever, other than it's politically popular. So my guess is we run into trouble here in the U.S. and maybe in the developed world before 2018 is done.
Max, how much of the global growth story that we've seen is down to the asset price growth story?
So it's a great question. It's hard to disentangle. Certainly extreme monetary accommodation from the EU, from the Japanese Central Bank Authority, from the Federal Reserve, Bank of England has been a big part of the story. Probably wouldn't be able to see the recovery or the baseline we've seen. I think we're starting to see some genuine macro strength, though, particularly in the developing world, starting to see a commodity price pickup. But I think the sort of halcyon days of really low interest rates, some growth, no wage inflation, massive political instability that doesn't pass through to the economics, and no pressure on commodity prices, that was a kind of unusual sweet spot moment. I think that we're really what's left of that is measured probably in my mind in months, not years.
I'm glad you picked up on the commodity prices, because that is a recurring theme in the World Bank's report. That a lot of this growth has been driven because of that recovery in commodity prices. Where do you see oil in particular heading this year?
Yeah, so look, I think oil is still going to go up. I think oil is going to go up on some regional instability issues. Not so much the Iran protests we've seen of late, but bigger, more structural issues, especially as we see the attempt by the Saudis to sort of assert some regional dominance, and they see that's pretty unpopular with a lot of folks in the region for a whole host of historical reasons. And I also think there's some interest both from the Russian authorities as well as the Middle Eastern authorities in having a strong oil price, Saudi Aramco, IPO, other issues. So I do think oil continues on the way up, and I think that kind of hurts global growth a little bit because there are more countries that need oil for their industrialization than there are giant beneficiaries of rising oil prices.
Right. Craig, let's turn to you for a second. Now, how are the changes in US economic policy, and it's been some pretty major shifts this year that we've seen, how are those changes likely to affect growth in the rest of the world?
I think they're going to affect growth in that Donald Trump's going to say, bring your money here to America. You know, call it trickle-down Trump. He's going to take this World Bank report and he's going to tub-thump it, and he's going to claim that a lot of it is due to his policies over the past 12 months, whether they work or not. And he's going to say, why do you want to invest in other countries when you can come and join in the American explosion, the boom? Look at our stock market. He's going to tub thump this all over the world.
And probably nowhere less so than in Davos later this month. He's confirmed he's going to the World Economic Forum there. What is his message going to be to the world over there, in particular China?
Well, he's going to say, why do you want to do business with China? Come and do business here in the United States. He's going to point to the, let's talk about the World Bank here for a second. Remember, the World Bank was started in 1944 for the express purpose of containing the growth of what they said in their charter was the growth of Soviet communist domination. Trump, it's not Soviet communist domination anymore. That's old world, but Trump does not like China. He's competing against China. He's going to say, we can do better deals for you if you invest in the United States. He's going to tell them this in Davos. He's going to try and sell them the yellow snow. Whether they buy it or not remains to be seen. But look at what he's doing. He's preventing, and the United States government is preventing Chinese companies from investing in the U.S. This will have a short-term trickle-down effect. Likely, I agree, probably at least for the first 2, perhaps 3 quarters of this year.